Hello, hello, what's up, guys? And thanks for tuning in and welcome to another weekly crypto market update. This is Setup Saturday, and I'm here with Zero Cool. How are you?
Ooh, loaded question after seeing the market this week. My portfolio is not okay. Myself, I'm pretty okay. How are you?
All right. So as you can see, I'm here in another location. So I'm at a holiday in Spain. But we wanted to give you guys a quick weekly market update. As always, will be a short one. And today, since I don't have my computer, it's Zero Cool that will take over the reins and will explain everything. So
Absolutely.
let's dive right into it. Yeah, you got the screen.
Yep. All right, let's go. We're gonna speed run the macro part. Fed decisions. Biggest one was 2 days ago. We lead into there's gonna be no change for like 76%. So basically, entire market is thinking no change, and then that flipped. We're currently at a 66% chance that there is a decrease, which is a huge flip, meaning the market was pricing in another decrease. The odds, because of comments from the Fed, said, no, it's probably not happening. We're looking at the data, blah, blah, blah. You know, the usual spill about numbers that they cook up. And it flipped. They're back to the odds are back to it's going to be a cut in December. We all know cut is supposed to be bullish. And we had little to no reaction to this. So this is the first bullish thing around these abysmal prices that we're trading at. That if we get a cut on the 10th of December, I believe it is,
Yeah.
10th of December, that we should see some relief. Yeah, the flip. This is probably the not most important part, but the most interesting part this week, and it goes a bit against the price action we've seen this week.
Well, I think it's super important. One, because I think this is, in my opinion, one of the most important reasons why the market is dropping. But then again, like I said, I think the last time is because, no, I think I told you in private, because you could take a bet saying, okay, the market will drop, so you can short it, and then you're safe in the betting markets to say that there will be no increase, or the other way around. You can hedge it like this. And what I basically wanted to say about this is, so for example, now the market dropped enormously, and I think that's now one of the reasons we see the odds going up, because since the market is not at all-time high anymore, S&P, Nasdaq, Bitcoin, the Fed has more room to cut interest rates. And then I think the other reason was, but I think you're going to show it, that this week the FOMC showed the minutes of their last FOMC meeting, and I think that was a bit more dovish than people thought.
Yeah, we'll put it on the screen now. So this is your print about FOMC minutes. Actually, don't 100% know what this represents. It's, I think, an indicator of how hawkish or dovish they are.
Yeah, so basically what they do is they do how can I say it, a quantitative text analysis. So it's from Econometrics, and so they gauge. I don't know how they do it, or if they use AI or not. What's in the FOMC minutes, that it's dovish or hawkish.
Yeah.
And apparently this was more dovish than they thought it would be. And as you can see, the trend is going lower. So even though they said, because I said last week or 2 weeks ago that a lot of Fed officials said maybe we won't see a rate cut in December, but you can see in the minutes, based on this quantitative text analysis, that they still do think that we will probably see a rate cut in December, which is probably why the odds switched.
Yeah. Again, this is contradicting to what the market was predicting in the start of the week, right? And a lot of I think we're trading very correlated with news now. Like if there's a news event, the price starts moving regarding to what the news event is, and we'll see that later with Nvidia. We'll go in there as well. I didn't put it one-on-one price action between Nvidia and Bitcoin or crypto in general, but it's almost one-on-one of what the news is and what happened. All right, what's next? Jack's favorite, global liquidity. We had a little nosedive in global liquidity. I don't have the exact numbers, but it went down. Despite very strong injections from the Bank of China, PBOC, they had very big injections of capital into their system. And collaterals that the entire market is made out of, so mainly gold. they didn't drop like Bitcoin did. They leveled off and rise like 1 or 2%, I think, give or take, during the week. So that put some downward pressure on global liquidity. And despite the Fed being very dovish and saying they're going to end QT at the end of the month, they're still tightening the liquidity. So maybe by the end of the week or next week, they'll flip their script, and it will start to look more like QT.
Yeah, we know Fed liquidity is not going in the right direction. I showed it in the last stream as well, or maybe 2 streams ago, that the TGA is still going up. I don't think I've seen it going lower. I thought once the government would reopen that they were going to drain the TGA because they're what was it, 250 billion above their target, so they should be draining it at the moment. And I think this is also one of the reasons that we saw the drop, that they didn't do it as soon as they could, and there's just no liquidity to support the markets.
Yep. What's next? What do I have here? Oh, yes, this one. This is global liquidity and a crypto basket. That's our friends of, I don't know what his firm is from, Michael Howell, the firm he runs.
Cross-border capital.
Yes, that one. They have a basket of Bitcoin, Ethereum, and Solana with a 6-week average, I think this is, against the global liquidity with a 13-week lag. And you can see here it's pretty correlated. The baskets of crypto is more reflexive, but it kind of follows one-on-one how the global liquidity with a 13-week lag is trading. What we are seeing here is that I think if you opened your portfolio this week, you've noticed crypto is down a lot, but the global liquidity with a 13-week lag is indicating that there should be some relief coming, which is second bullish thing that is.
I don't know, where do you see the relief coming? It's still in the minus 1% on the global liquidity.
This little uptick from like 1.3% to 1%.
Yeah.
But maybe it is indeed correlated with the zero line, which is not really shown here. Also interesting that they're zero, like they're 0% on the crypto index or basket, is 1% on the global liquidity change. I don't know if that's a little error or something you can probably ask him. Now, let's continue, because Jack is on vacation. I don't want to keep him too long, and if I'm in the driver's seat showing what, he comes very prepared. I'm just YOLOing this. He sent me screenshots to talk about, so I'm showing the screenshots. All right, next part, which is an interesting one, is NVIDIA. They had their earnings on Wednesday. Let's see what they were. They had a surprise beat because the estimates were down. So the market was predicting that they were going to miss earnings and miss revenue. And they both beat earnings and revenue. That should be bullish, what we see. And we can do this if we put the crypto price next to this. You'll see the second those earnings were, the entire market bounced. Crypto bounced, other tech stock bounced, nuclear stocks bounced, they all bounced. And we opened pretty high. Let's see how high this is. Yeah, we had like a 5% to the peak open, 3.7% on the open. But then, and I debated with Jack if we were gonna go into this or not. Personally, I think it has merit and we should go into this. He believes it has less merit and it's a little bit fear and FUD.
Over-exaggerated.
But the reason the market and reason NVIDIA tumbled and closed lower that day is because of reports like this. You have firms deep diving into the massive, because when they do financial reporting for companies like NVIDIA, it's not 4 pages, it's like 400 pages. Good luck going through that manually. But now you have AI, right? And what algorithms have found and what the markets started to tumble on were reports like this, where AI is, not AI is claiming, the market reports are claiming that the entire report is just like one big financing scheme. And there's 2 or 3 components to it. One is that something that everybody's talking about, and even Michael Barry, the big short guy, is heavily doubling down on, and keeps repeating that he thinks that it is that it's why this is an AI bubble, and that it's the money slushing around between the firms, right?
That's
money
true.
going from. That's what the
That's the thing
report states.
that's the thing that's true. For example, Nvidia is investing in XAI. XAI is then ordering GPUs with that same capital. That's true.
Yeah.
That's the only allegation that's true. But in my opinion, that's not even necessarily bad or evil or cook the books.
I'm
That's
gonna quickly look up if I can find his tweet about it. He had a nice
it's
graph of the money slushing around.
Yeah. But then again, I think every single investor would want to invest in these AI companies. And also, second reason, it's not that they don't have any revenue. For example, the .com bubble, there was no revenue at all. Here, as you can see with the Nvidia numbers, they have revenue. OpenAI does have revenue as well. XAI does have revenue. The only thing what they're doing is they're buying things from each other, and with that capital, they buy other things from the other company, and it's just a big circle basically. I think that's the image you're looking for.
Yeah, can't find it for some reason, but yeah, basically money is flowing in between these companies, and they're each reporting it as income, while it's basically the same money being slushed around. I think another part was.
Is that really bad? I mean, if you could invest in OpenAI at the valuation that Nvidia invests, for example, you would do it, right? Everyone would do it because there's not really another way we can get exposure. So
yeah, but the problem is OpenAI takes that money and goes to the next company and they say, hey, we promise you 90% of that slice that we just got from the other company, and they put in 10%, then it costs them 10%, and the 90% comes from money they didn't even pass through them. It's just on the books that it passed through them. So that is a very dangerous game, honestly.
Yeah, it's dangerous, but then the point is just, okay, how long can they do this? How much can they do this? I think eventually they will need to book some profits, and the companies needs to be profitable, of course. But I think we're too early for that. I think it's will be much further down the line.
Yep, probably. Anyhow, my point being that Nvidia closed lower than they opened, and it is on news like this, like reports like this, and this was partially cause for the next leg down in crypto. I think the fear and the uncertainty in the tech sector, because crypto is and will remain a very risk-on asset, regardless if it's going for like a global reserve status or not, like gold is now. It will be more volatile, and news like this, like I said at the start of the stream, crypto right now is very news driven, very event driven, more than it was weeks ago. Because weeks ago you had like bullish news, the price didn't do anything. You have negative news, the price didn't do anything. Now you have stuff like this and the price just keeps plummeting. All right, next part, an interesting one. Solana ETF flows. We haven't covered this at all, I think, at the start of the ETFs craze months and years ago. I think it's months, time flies too fast, and I have no concept of time anymore. We should track Bitcoin and Ethereum, go over these numbers, look what the changes were. We stopped doing that, but Solana ETF went live on the 3rd of November. And for, 18 straight days, we had positive inflows. Now, you're going to look at the Solana chart and see for 18 straight days, the price is down. And you're like, what the fuck is this? Why is it inverse correlated? So it's quite simple. People cash out their actual Solana and they buy the ETF. Not everybody, but that's a big part of it. And you've seen also that in crypto or in Bitcoin. And there's very big crypto Twitter accounts who publicly stated that they're doing this, not in the record of like, total 444 million. Probably it is in the range of for hundreds of millions for Bitcoin, but there isn't that much money in Solana yet, right? So
you think that's what's happening? That would be weird if a big hedge fund would prefer this over normal Solana, because I think if you stake Solana, you get somewhere between 3 to 6% APY, and here you even have to pay 0.2% fee. So
absolutely,
I don't know.
but if you need to cash out $100 million in crypto versus you need to cash out $100 million in an ETF, the speed, the fees, and the taxes you're going to pay on an ETF are way lower than it is on cashing out on-chain crypto. And that's why the crypto bill in America, where like the rumor is that it's going to be tax-free to cash out, is a massive one, right? Because then it would be cheaper than playing ETFs, for example.
It's possible. I don't know.
All right, and that's all the macro-ish news that I have. We speed ran through it. Normally, like I said, normally Jack prepares this. He just sent me the screenshots he would like to talk about, so I speed ran through it. And then we can go to the quote-unquote fun part. Let's look at the Bitcoin price. I don't know if I would call it fun this week, but here we are. All right, what I'm gonna first do is remove my alarm that I had set here. Boop. Delete. Yes. All right, let's have a look-see. We'll double back a bit. I think, yeah, this is the weekly. A couple of weeks ago, we said this here with the long wick is not a market structure break. The weeks after, it closed below. No, sorry. For me, this was a low, right? Every wick here below is not a market structure break. Then 3 weeks ago, we had our close below. For me, that was a market structure break, meaning don't press the long button too fast. And since then, we've been going lower and lower. The yearly open is around 94 something. We've co-lines with this line. We tested it. We bounced a little bit off it, and then we lost it, retested it, and we're going lower. This is not a good look. The last stream, I said start marking out levels below. Well, we're at the first level that I marked out, which was around, I think, this box. And we're right here. Said last week, oh, if you don't have any spot Bitcoin, start allocating a little bit. I'll say it again. If you haven't allocated, start allocating more. If you allocated a little bit beforehand, add more. I bought back some IBIT ETF shares at 86 and 82,000. I think my average quote-unquote price is somewhere where we're idling now. Structure-wise, zoomed out, this could be the bottom, I think. It doesn't look as bad as the sentiment is. I think the fear index or fear and greed index is absolutely at very low points. It has no correlation with the price. I can link
It's
some
even
stuff.
under the FTX free and greed number. It's crazy.
It's just a moment like at this moment indicator. It has nothing to do with future price. I can link you in-depth articles on that. It's a bit of a Fugazi indicator, just shows you how panicky people are and how bottom selling they are, I guess. But yeah, looks bad. This kind of needs to hold, or we're going to see more pain, I think, obviously. Up or down, we'll see. For me, the next level is this line here, around 71. Yeah, I got this box here. So this and this. This is, for me, the next level of interest. But then, let's say we do a leg down next week and we print this candle. Then we have a big problem. Then we have a market structure break on a monthly, or on the weekly, but on a monthly. We'll do it like this. We start closing here. This is, by the way, your monthly order block as well. That's why it's not a bad place to allocate. I wouldn't smash longs yet. I think if we see a bottom, it's going to be during stock hours, American stock hours on a Monday, for example. Put in a Monday low and then sweep it and go higher. That could be a potential low. I don't think we're going to put in a temporary or a local low here during the weekends. But my point being, once we start closing below the base here, we're going to have a structure break on a monthly level. And then the next support is around 69.70. And the next one below that is then 63-ish. Yeah, if we start closing monthly structure breaks, yeah, then we're a bit cooked, I think, for the time being. We've seen this here as well. Where is it? So this is your low your monthly level. If we start closing below, unless the next month you can close above, we were in for a bear market, right? I don't think we're in a bear market yet, but we're getting there. If we get a structure break on a very high level, like a high level time frame, so monthly, it's cooked for a while. And I think the center rally I've been praying for is not gonna happen if we close, I think, next week below this level. But for now, we're bouncing on an expected area to bounce. One thing I want to indicate as well is with this indicator I'm using from T7R. We've seen on the weekly level, we've seen the first warning signs. This is a double red down here. Last time that happened, mid bull cycle was like when we dipped here in August 2023, August, September. It's not the end of the world, but when we start looking at 2021, this was your first warning sign. Again, months of bearish consolidation. At best, I think we get bearish consolidation and we reverse. Unless we put in like a giga chat candle and start closing above 100,000, 100 and here's the next line, I think. Like, yeah, above 100,000, I think at best we're in for some bearish consolidation here. And then you don't have price capitulation, but time capitulation. I think it's something we've talked about in the stream. You have 2 times of capitulation. So let's say this is your charts. We do a big nuke. People get flushed out. That's price capitulation. But how can people also get flushed out and sell their stuff is when price just does this for months on end. They get bored, they walk away, they say, fuck it, it's not going anywhere, I'm selling. They'll sell if the price is down too much and they're like, oh, I'm out. Or they'll sell with the time is just going on too long and they think they have better investment opportunities elsewhere, and it's time-based capitulation. And
to be honest, I think that already happened. For a year long, we didn't move up, so I think we already see some kind of time-based capitulation.
Yeah, and we're also under the yearly, so we're trading lower than the start of the year, which is not a good thing. If you've invested in crypto during this year, you did not make a profit, which is pretty sad if you think about it. Well, it's sad if you think about it compared to the stock market, which was up only. If you've been in AI, you've made quite some returns. If you've been in nuclear, you made even more returns. Yeah, quite sad state of affairs. But
also, what's the important indicator? The 50-week moving average or something? We were trading below it as well. Do you have that one?
50 MA.
I think so.
Moving average is 50 and 200. Yeah. So this is your 50, I think, in the green.
Yeah, we lost it.
Yeah, it doesn't show. Yeah, 50. We can quickly make sure if we do the color yellow. Yeah, this is your 50.
And then afterward, I also wanted to check if you could, is maybe the crypto Ishimoku cloud.
Yeah,
I think we're into the weekly cloud at the moment.
I'll also throw this on here. This is your 255,000. I don't want to think about that. Let's do level by level, right? Levels are this, and this. Give or take 71.63. Those are the next levels I would look around to find trades. If we start closing down here, you have your structure break on a monthly time basis, and then we're really cooked for a couple of months. I think then it will take time to recover. It's not impossible that we just recover, but unlikely. We were talking about time-based capitulation. If we start closing below this 77 low, I think we're pretty cooked for the time being. And if we clean up the chart, oh yeah, we were looking at the double red signal down here. Last time it happened was during this consolidation time-based capitulation. We still continued because we were in a bear market, but before that, we saw it as the double top in 2021. And then it flashed again when we were coming down. And if I have to compare it, I'm thinking we're more in this kind of situation where we're going to do this and then roll over. I don't know how deep. Let's hope not too deep, but it aligns more with with this as here as well. Your MAs or your RSI was above 50. Your RSI here is above 50, and it takes time to bleed on a weekly level. But yeah, it's not looking that good. But for me personally, this does not change how I look at crypto. I think crypto is the asset you need to allocate in, and if we get lower prices later on, it's a good thing for me because then I can invest more at a lower price. And then I'm not talking weeks or months, then I'm talking 5, 10, 20 years, right? And that's it for me. Oh, you wanted the indicator.
Yeah,
I'm trying to think.
just do Ishimoku Cloud, and then I don't know if you.
Here we go.
That might be right. Yeah.
Yeah, we're starting to close in the cloud this weekly. We have some time. The cloud usually offers some support. If we go back on a weekly time frame, you can see here. We also closed on top of it, and then we had a little support bounce off it over here before we start to do closing inside of it. Very realistic edge to edge is this.
Yeah, that's what worries me a bit. But maybe we can make it support. It's still the candle is still not closed.
True, and again, like I've shown here, let's zoom in a little bit on it. It doesn't mean that if we start closing in it, because also we're Saturday, the week isn't closed yet. It usually on the first test offers support.
Yeah.
Where you really need to worry is when we start closing below it, like over here. If we start doing that, then you can panic and call it a good game for several months. But for now, we are above the clouds. The purple one, I'll never remember the name, is starting to trade into the price. It's never bullish. It means that there is what's it called? Momentum is fading. Yeah. For now, we'll treat this as support, but the next leg for an edge-to-edge play, which I think I'll take if it starts to develop, is from 85 to for next week 64, and those are again the levels that I was mapping out over here, right? These. It kind of lines up. So this is a possible play that you can do, but I wouldn't like smash short now, right? If we open, take the open interest, I'll quickly open Coinalyze for that.
I don't know if you see the comments. Chris is also saying, holding my 125K top short to 40K, but think we're going to get a complacency bounce to form a head and shoulders. Then he's saying, yeah. And then the second comment was been trying to knife catch with the bulls and getting smoked on my trading account.
Yeah, same. I also smoked one up. Well, there's still money left in it, but I also tried to play a bounce, and it's absolutely not happening. What I wanted to show quickly was total open interest on Bitcoin. This week's capitulation was not the same as the 10th, right? If we zoom in a little deeper, so you had your giga capitulation here in open interests, and while we're bleeding now, we're not really seeing in open interests bleed. So what is more likely to happen is that, what is happening, it's kind of hard to deny, and the comment says it as well. People are trying to long this, and price is just going against them, and you just got chop in your open interest because people are long closing, and you just slowly do this, maybe a little bit like that, while price does this, and it bottoms out when people have capitulated on price or due time, and it starts to reverse when this starts to reverse hard. But yeah, open interest wise, this does not scream that it has bottomed either, honestly. maybe we get that rate cut and they stop QT and every indicator screams risk on. Perhaps that's what happens into December, and December 10th is pretty close. Last thing I wanted to show, but I don't have it up yet, is the predictions from last week.
Yeah, I don't have it either.
I think you posted it on the Discords.
No, I didn't post them. But I know. Yeah, I posted it on Wednesday or something.
Yeah, I just don't know what channel.
I think, yeah, in the live stream channel, I think I can check it. Yeah, I think you're exactly on where the price is at the moment. I think you've used. Oh no, it's even lower. I think you said 86K. Yeah.
Yep, I almost got it. 1 second. Yeah, it's as I've said. When Jack prepares this, he's prepared. He's got everything open. For me, it's very much on the fly. Here we go. So this was from a couple of days ago. I said 86,000. We're currently at 84-ish. So my prediction was indeed correct, unfortunately. And we're here, as you can see in the screenshot here, like almost into the cloud, right? We're like hovering just below the top of the cloud. Support for now, but yeah, if it's an edge-to-edge cloud player, we're looking at low 70s, and that's going to be very painful.
All right, that's perfect. That's
yeah. I had one more thesis. We don't need to throw a chart for it, and that's the midterms, right? I think I've talked about it before. If the economy is down into the midterms, there's less likely chance people will re-elect Trump. So they're going to do everything possible to stimulate this economy into the midterms next year.
The midterms and a new Fed chair, which is in May, I think, which will help as well.
Yeah,
because I think, I don't know 100% how it works, but I think Trump has a big say in who gets elected. So
probably has
will be
some
someone
sway.
who pumps the market.
Yeah, you need to look at it this way, right? Let's say we keep pumping higher and higher on the stocks, and you want to stimulate the economy going into the midterms when the stocks are at all-time high. That is insanely hard. It's already hard now because it's a K-shaped economy, and whatever you do for the lower leg of the K will inflict the upper leg of the K. So the only thing you can do is cap the upper leg of the K, and I think that's what's happening now. I think the tightening that we're seeing and the liquidity not being injected into the markets has to do with them not wanting to save the stock market just yet, because if they do it now into the midterms, that's a very long period. That's like 7-8 months question mark. To keep doing that for 7-8 months, you're just gonna keep destroying the lower leg of the economy. The rich get richer and the poor stay poor. You're killing the in between, the middle class, which personally I think already doesn't exist anymore. You're either poor or just okay, or you're giga rich. The in between is vanishing fast and faster. Point that I'm trying to make is they're not stimulating the economy right here, and they're letting the stock market dwindle down a little bit and not quote unquote saving it because they want to do that towards the midterms when they say, oh, prices are down, gasoline is down, food is cheaper, I'm better off living paycheck to paycheck, or I'm saving more if I'm living paycheck to paycheck going into the midterms than I was 6 months ago. And I think that's a big one. So we do think I see like a mid Q2 rally next year. That wouldn't surprise me on crypto, just based on them trying to stimulate for the midterms. And that's what I wanted to end with.
All right, perfect. Zero Cool, thank you very much for leading the show. And so everyone, if you liked it, if you liked Zero Cool's, how can I say it?
Impromptu hosting.
Leave a comment in the comment section. As always, leave a like. That would help us very much. And then next week, we won't be here because I will still be in Spain and Zero Cool has also something to do. So we see each other in 2 weeks. Or if you join our Discord, we're there every day. So
day and nights.
Bye, guys. Thank you for watching.
See you guys next. Bye-bye.